Breaking news out of New York involving the New York Cannabis Board, who okayed the settlement licensing suit brought by veterans, which really paves the way for more dispensaries opening. So, in a nutshell, the Office of Cannabis Management's Cannabis Control Board voted to approve resolution to settle the lawsuit brought by service-disabled military veterans and a coalition of medical cannabis dispensaries referred to as ROs. So, Anthony, what's this mean, you think, with this settlement being, I guess this lawsuit being, I don't want to, is it settled right now? Like,
It's
where
settled.
it is settled.
It's officially settled. There is no indication as per the arrangements of the settlement, but this was the major blockade that was holding up the New York market from moving forward. Boris is already tweeting about it. Several other people that I follow are already tweeting about it. This is a huge step in the right direction for the New York cannabis market. This was a major injunction. This was literally what was blocking up the dam. I'm not going to say it's smooth sailing from here. I mean, the report that we're going to talk about from the adult use markets that Pablo published about a week ago, I mean, the New York market is such a mess that he omitted the entire state from any of the growth prospects for any of the businesses. And this was all predicated on adult use markets that could hit their stride from now until 2025. So, yes, this is a net positive. How positive? It's yet to be determined.
Yeah. I guess that's the big question. How positive, right, Ben?
Yeah. As long as we get the blockade out and we get the licenses flowing, that is a good sign. It's still very muddled. So I'm with Anthony on here. I'm still waiting for more information about when, the whole licensing process happens and timelines surrounding about that. But this is definitely positive news. It's a good step in the right direction, and hopefully we can move forward.
Well, I think if anything, there's a lot of work and a lot of cleanup that needs to be done within the state, but I guess it goes to like some of the stuff that we've been hearing recently, which is why this state or this market could be the biggest cannabis market in the world if it's like, structured the right way. But today's announcement obviously is a big step in the right direction, right?
Yeah. I mean,
absolutely.
don't get me wrong. I mean, in my own self-interest, I mean, obviously I want the MSOs, most notably Curaleaf, the cannabis, I mean, to get GTI to get operational in the state. But I mean, there's people's livelihoods at stake here. There were farmers in upstate New York. There were people that pivoted and retrofitted their business for the coming cannabis sector. And I mean, those people are going broke. I mean, I've heard stories of people committing suicide. Like this market needs to get moving forward and getting moving in the right direction, because people's livelihoods have been at stake. And I mean, they'll continue to be at stake until this is completely rectified.
It's crazy that that's happened.
Not just the MSOs; it's also with the social justice licensing aspect of it. They've sort of kind of botched some of the support that they were going to give to these applicants, and these people aren't open on time. So the independent operators. So it's been bad for MSOs, but it's also been bad for the indie guys as well.
Next headline, let's move. German lawmakers, news out of Germany. We actually were at that conference a couple of weeks ago, Anthony, in New York, where we met a few German people that said adult use is going to happen in Q1. And based on the news here today, Ben, some German lawmakers have agreed to revise a marijuana legalization bill, which is, a big step in the right direction. So based on your latest research pertaining to this, what have you learned?
Yeah, this is important because it sets the stage for a final vote in the national parliament next week. And this is another one that had been, shifting timelines of when the vote was going to take place. It was supposed to originally take place in the summer, and then it got delayed. And there's some back and forth in the Bundestag, and they're talking about adding more provisions, and then, they made it stricter, and some cannabis proponents came in and said, oh, this is too strict. So now it looks like they've amended it. It looks like it's in basically the final stage of before it's being going to be voted for next week. And hopefully if it passes, then legalization will be good to go in Germany, and just a matter of implementation of the bill. So this is a good result, good news, and looking forward to seeing what the result is next week if the vote does take place.
That would be huge if we do see that. Huge. And
it would be awesome.
What that'll do for the overall industry if we see adult use at some point in Q1.
It would be awesome. And I mean, from my understanding, one of the things that was holding it up was public consumption. I think they just reduced it from you can't consume within 200 meters of a school to now you can't consume within 100 meters of a school. And then it was also around the actual severity of infractions if you're caught selling to minors, which throw the book at them. If you're selling cannabis to minors, like,
Yeah, of course.
you've got no place really in society. So it seems like it's finally getting done. It'd be amazing. Obviously, companies like Curaleaf would be a big beneficiary first,
Huge.
as they're actually operating over there. But it's big.
Do you
Yep.
find that when you look at public perception that North America is quite a bit further ahead when it comes to cannabis than the German market?
I don't know much about German social norms, but if I had to guess, what I do know is that they're quite conservative as a whole for a society.
Yeah.
I would have to guess that when it comes to cannabis, we're probably more liberal in this country.
Yeah. Well, when you outline some of the things that were just outlined within this bill about being consumption 200 meters to 100 meters, that sort of thing around schools, important stuff, but this is all doable stuff to get this across the line in a relatively quick fashion, I would think. But
Yeah. But I also am a firm. I might get some flack for this, but I'm also a firm believer of you probably shouldn't be consuming cannabis in public. Like, just because I want to be smoking doesn't mean that I have to subject the person that's next to me to that smoke. I mean, cannabis, when you're smoking it, especially in a combustible flower form, it's intrusive. I'm against public consumption for the most part when it comes to actually combusting joints, blunts, or anything like that.
yeah, be curious to know what percentage of Germans still smoke cigarettes. I would think it's still pretty
Probably
high.
a lot.
Yeah.
A lot. Yeah.
Yeah.
The three of you guys are obviously entrenched in the sector from a lending and from a banking perspective. How does it play into your underwriting process, public versus private? Like, does it matter? Is it something you take into account, or like, how do you look at that? Because I've actually never thought about that from an operator perspective.
Yeah, I think for us at New Lake, it certainly does. I think that there's a level of discipline that a company has when they're a public company. It doesn't mean the private ones are bad, but it is a part of the underwriting process to understand what's the level of financial discipline and reporting discipline that a company has. And many of the public companies do have that. Some of them not as well as even the private companies do. Also, for those that have debt, right? Public company debt is a little different than if you have one lender loaning to a single state operator. And so there's that element as well. It's not an absolute good or bad, but it is part of the analysis.
I'd say it's definitely part of the analysis for sure. But I think that public companies are driven by different macro theses than a small private company. A public company is having to drive for growth in revenue, growth in profitability, and short-term gains every single quarter, as opposed to a private company, especially a closely held with very few investors, family held, that are purely making the best strategic decisions for the long term of that market. And that is a completely different outlook than a publicly traded company. They might be trying to plan for the future, but they have to be hitting performance metrics for each quarter.
On the backside, keying more in on that, on the backside of what we're looking at, Schedule 3, safe banking, do you see massive consolidation happening where these public companies do scoop up these private operators? Do you think there's going to be enough meat on the bone and space for the private operators to continue to excel in their respective markets?
I'm happy to take that one first. I think that when that's Schedule 3, if it occurs next year, I think that everybody's mindset is that their valuations are going to improve and nobody's going to want to sell. Because anything that's going to happen would be happening right now, or should have already happened. Even if the values haven't changed, in their mind they have, or they're going to. And so that premium is starting to be built in, and they're like, look, we've made it this far, we're going to hang on. So I don't see a significant shift, just in my initial thought of it, of a bunch of roll-ups happening just because of that. I think that everybody still will be focused on profitability, and I don't think we're going to see the full effects of rescheduling, even if it is passed or is it is approved next year. We still don't know if they're going to include 2024 as the year that it's retroactive for the taxes, or if it'll be implemented in 2025. Okay. We don't know that yet, and so I think that it'll be some time before, even if it is tax effective in 2024. I don't think that the capital markets and everything will really start to figure things out until 2025, 2026, because it's got to they got to get comfortable with the sector. There's been so much stigma around it that they're like, okay, we got to come and start looking at this. And I just don't think that, I think that there's been so much retail capital burnt up in the space, and the institutional investors saw all that happen, and they've also seen all the mistakes that were made in Canada, and some of those same mistakes repeated here. That they don't need to rush in. You don't need to be hit bottom tick that investment. I'd rather get that investment when I think it's on a solid track, moving up.
So let's tackle the elephant in the room. I think we all agree. Rescheduling, yes, no. Does it happen in 2024?
Probably does. Yeah,
more
I'd
so,
have to put my money on it.
More so than in 2023.
A lot of people
going out on a limb there,
Rob.
Rob.
Down Monday. And I'm like, based off of
I'm willing to say not in 2023 and not in Q4 2024.
Yeah, safe assumption.
Mm-hmm.
Yeah.
So, okay, they make the announcement. You and I have talked a lot about what people need to do as far as investors in this space and managing expectations. That announcement comes. We see probably euphoria of stocks rip for a couple of weeks. But once that starts to subside and settle, what should people be aware of if they're looking and interested within this space? Because your background, being in banking, some of the hurdles that we as Rob was indicating, and how we need to digest this over the course of 18 to 24 months. Like, how does this play out once the original announcement is made?
Depends on what it is. So if we're talking about rescheduling, that's something different, right? And if that happens, I think one of the things that people haven't yet grasped is if 280E goes away, there's a massive profit increase for everybody, and that's great. But what it also does is it enables financial institutions like us or lenders to underwrite differently, right? Because with 280E is a hurdle, institutions are less likely. There's a smaller group of capped borrowers that we're going to lend to, right? If 280E goes away, that opens up massively, and capital should get a lot cheaper. So that's a huge benefit. Safer, that's a different animal.
I would say it's slightly different. Those are all true, but I think that the universe of capital expands bigger.
Correct.
And the universe being bigger will then drive the pricing down for what our structured capital and the financial products that we're working on, and thus that we're finally able to pass that through to the borrower.
Are you seeing any large institutional players kind of come, not come like want to come forward to deploy capital, but be like, guys, you've got your finger on the pulse of where this is going. What should I be looking at?
In our structured products that we did, in our bond and our securitization, there was some bigger banks that you would recognize the names of, but there's no big guys yet. Now, we have had intermittent talks with some of the biggest players out there. They just aren't ready to come into the space yet. And
what do they say?
We will never get the direct answer. It's usually, some of the biggest ones, some of them were starting with Bs, and they are just, they're not in a hurry to come into the space. And I think that all the stocks ripping, if rescheduling is announced, is all retail that would do that. Mm-hmm. And I think that in reality, this sector doesn't become legitimate until institutional capital is here with consistent velocity. And until you have those trades of millions of shares a day to stabilize that stock, and that's going to be a while out. And so that retail ripping of the stocks is still going to be ups and downs on a general trend up over time. And so I just caution people that you're still in that retail world. And I've always been saying, until we get that institutional capital that's solidifying the base in here, which is, I don't know what the percentage is of relative of institutional to retail, but
97% like retail.
Most is retail.
But what is the normal market? 90 to 10 or 95 to 5?
Probably 80% or so institutional.
Yeah. So until those ratios come that way, this industry isn't stable. It's not matured from the financial side. So we've always been talking about the maturation of the cannabis sector from the operator standpoint, but we haven't talked about it on the institutional investor on the capital standpoint, and that's got to mature too.
Talking about the maturation, Tyler, your background, payment processing, the banking that you guys are doing with Safe Harbor, we've seen a drawdown in debit card activity in the sector across the board. And I think there's a lot of misconception out there with S3 and Safer. What is the inflection point to where you start to see debit transactions come back and a loosening up and credit cards actually come into the space?
I know nobody wants to hear this, but it's federal legality.
Yeah.
And the networks have been very specific about that. So if you look at Safer, you know, it was interesting. MJ Biz did a poll to the member base a couple of years ago, and they asked the question, what are you most excited about as Safe passes? And I think 80% of the responses were, we can't wait to use credit cards.
Correct.
And I had just literally talked to the networks the week before, and you know, they're saying behind the scenes, it's not going to happen, right?
Why do they say it? Like, give us reasons why.
Well, so they are prohibited from participating in any federally illegal industry,
Right.
And Safe doesn't change the federal legal status of the product.
Mhm.
So from their standpoint, it's the same as any other prohibited item, which, you know, take your pick of nefarious industries that they don't want to be a part of. So to them, it's the same.
Right, but they're not banks, right? So when you think about Safe,
Correct.
Safe provides a safe harbor for banks.
Yeah.
These are technology companies
Correct.
that allow transactions to occur over their rails. And so they don't have that protection that everybody thinks they have. Now, if Safer was amended to provide a safe harbor specifically for the exchange for those networks, maybe that would be a different story. But as it sits today, they don't have that. Right?
Yeah,
Correct.
I know we saw Elizabeth Warren, I think 2 weeks ago, draft some sort of legislation around FinCEN and like AML, which is another thing that a lot of retail investors and participants in the sector don't understand. Could that alleviate credit cards to an extent?
But it's coming from the wrong place.
I
Yeah,
get that.
her writing a letter doesn't do crap.
Yeah.
Maybe
all of that is really not going to be effective, because when you think about the revenue opportunity for a MasterCard, a Visa, or
Yeah.
Discover, or even any of the big banks, you think of the revenue opportunity in cannabis relative to their total P&L, it's really, really small.
Yeah.
And so why will you take compliance risk
Yeah.
in pursuing this? You'll just say it's not worth it, because when you're a large organization, having been in banking for most of my career,
Yeah.
when you're a large organization, the regulators look at you as the opportunity to make an example of you. And so the fine in many cases could be greater than the revenue opportunity. So it's better for them to just say, I'm on the sidelines until I get the explicit approval.
You spent 30 years at JP Morgan. Going back to
15 at
Tyler-
JP.
15, sorry.
It felt like 30.
dog years.
What's been the feedback? Kind of like what they were talking about, the ratio from like retail to investor, and some of the conversations that you had, if there is rescheduling. Like, do you have conversations right now? What's some of the feedback that you hear?
Yeah, which we're trying to engage with more and more institutional investors, because what I think could happen with the rescheduling, it could put us into what I call a positive feedback loop. I think you could get the ripping, as you've been talking about, on the stocks. And hopefully, and I would expect that MSOs like a cannabis that I think did a good job in issuing equity, hopefully we start to recapitalize the balance sheet. So you get equity prices to go up, you get issuance of stock, use some of that to pay down debt. That initial QAD will bring in a smaller but expanded circle of institutional investors. Once you repay some of the debt, you improve the cash flow profile of the business, you improve the balance sheet. That's going to get incrementally more institutional investors interested, send stocks hopefully higher, which allows them to issue more stock, recapitalize the balance sheet, and keep this positive momentum going. That's, to me, the best chance to get institutions involved.
So
over
we
the next year or
saw,
two.
I mean, we saw the
Hold on a second.
the
Were you
refi.
going to say something?
Yeah, I was just gonna say where we've seen, I wouldn't necessarily call it institutional capital, but where we've seen where the people are on the sidelines right now are massive asset managers that do these types of structured products, and they once they start doing the structured products, then I think that would open up the equity investments for them as well.
Makes sense.
So those are the guys that were on the sidelines that were all kicking the tires when we were doing our transactions.
You wanted to add something. I noticed when I brought that up with Anthony, we're talking about just with safe banking.
Yeah, well, there are a few things. I mean, on the payment side, you know, one of the things that people don't realize is with all of these other patchwork, whether it be cashless ATMs or the two banks that decided to take the chance with debit, that's creating issues for the networks outside of this as well, right? And that's taking a lot of their time, and they don't want to be viewed as the bad guy either, right? So there is a lot of motivation behind the scenes to get into it.
Yeah.
They just need the right catalyst to do it. And unfortunately for them, it's checking a box, and that's federal legality.
I don't know what this means or what this is going to entail, but a Republican state lawmaker in Ohio has introduced a bill to partially gut the voter-approved ballot measure that legalized recreational marijuana earlier this month, setting the stage for a possible legislative battle. Should investors at all read into this very much? Should they be concerned?
Well, if the adult use law is repealed in any way, if they're successful with that, then it could be a little concerning. It could hit sales on the adult use level if they're able to restrict, purchases in the state. But I think overall, it's just amazing how many people are going after this. Right? You had the Republican Senate leader go after it in Ohio. You had Mike DeWine go after it, and now lawmakers are going after it. So. Unlike other votes, ballot measures that have passed, this seems to be a very concerted effort from certain powerful Republicans in the state to really go after it, more than I can remember in other states that voters passed the ballot and it legalized no problem. So I'm not sure what's going on in Ohio, but yes, if they're able to repeal what can be bought and some of the covenants of what is allowed, then it could be restrictive.
Moment of truth, Anthony. Give me your take on this. What is going on?
So it was issue 2 was a statute, not a constitutional amendment. So in the state of Ohio, if it's not a constitutional amendment, that means that lawmakers can add or subtract at will. However, the lawmaker that is spearheading the initiatives we were reading about, he said that he's putting this out there to educate the general public and to create a dialogue. He doesn't necessarily want to implement these. He wants the people of Ohio to understand thoroughly what they've passed with issue 2. I actually don't have a problem with this.
Okay.
Because the mandates or the provisions that he would like to see or that he's bringing to the light from a communications perspective are municipalities can vote to limit the amount of dispensaries that are in their jurisdiction. That's common practice. You see it in Florida. You see it in Colorado. That's not a big outlier to me. He wants to reduce the amount of the tax revenue that goes to social equity applicants from 30% and change down to 19% and change. Okay. And he wants the actual people of Ohio to be educated to the point to know that pre-existing people with charges are getting preferential treatment to normal Ohio citizens. I think that's practical. I don't see anything wrong with that as well.
So big picture, is this like when you first glance at this, is this really a political battle or is this actually maybe not a bad thing?
No, they're being thorough. They're being thorough. Yeah. They want to create dialogue and they want to just make sure that they're checking all the boxes before this goes into motion. Because once it goes into motion, that cat is not going to be, or that genie is not going to be put back in the bottle. I don't have a problem with this. The headline was kind of sketchy at face value, but it looks like they're doing it to genuinely create dialogue and implement practices that we're seeing in other markets. So I don't think it's a net negative as per what's going on right now in Ohio.
What headline isn't sketchy these days in the media industry, right? Yeah, I'm curious to see, like you guys have always indicated in the past that, hey, get to phase 2. If there's strong results, what you'll probably see, and if it's compelling, for big pharma companies to come in and start sponsoring some of these phase 3 trials. But, Ben, you honestly understand the space more than anything. Like, what's your take on that? Do they need it? Obviously, after the raise and the 30 million, they don't. But what a heavy endorsement that would be to be working with a big pharma company.
It would, but I'm not sure if they even need it at this point. I mean, if I'm Doug Drysdale, if I'm in his shoes, I don't even know if I'd want to give a piece of the results, do any sort of royalty or anything like that. I mean, we're talking about 13.75 reduction in matter score. If they're going with the 12 milligram, it's over 14. And that's the one takeaway I had from the call yesterday, is that even if there's greater variability, as the question I asked Doug, even if there's greater variability and the results are less, say reduction in matter scores are 10, against placebo, standard SSRI medication averages under 2 points reduction in matter score. So it's possible that they could receive less robust results by a factor of half and still be a frontline treatment for MDD. I mean, that's how good the results are. The buffer with their research is so high that they can afford to, lose some results and still be the standard treatment if it goes through with safety.
So the idea is,
I'm not sure. They're cashed up. And you got to remember, in terms of the cash profile, they have $30 million raised. They have $18.1 million on their balance sheet as of their last financial report. And they also have 34 million US from the warrant exercise, which is only at 51 cents. And they also have a shelf registration for 125 million. So they can tap into that if they need to. Plus some other warrants on their cap table. So in terms of cash, they don't need big pharma cash.
Okay. So even with the big name endorsement like that, it does not make sense to piece this off right now.
No, I don't think so, because they'd have to piece it off. They'd have to get a royalty, and they can just get a top quality CRO to do their conduct a trial. And as long as they're funded, if they weren't funded, that might be another thing. But I think they're fully funded for this, especially given how robust the research is. They're going to have money is not going to be an issue.
Hey, Anthony, did you see the results? I know that you were reading a little bit yesterday morning while we were in Vegas.
I mean, I think Ben's spot on with his analysis. And I mean, I think that I stand by my statement. Obviously, this isn't financial advice, but I truly do believe that Cybin is the most investable company in the psychedelic space. Yeah. Especially when you're taking into account what's publicly traded.
Yeah.
Doug has the data, he has the financial tools, he has the human capital, and he has the strategic investors that are involved right now to where they can go it alone, and they probably can create immense value on the backside of all of this.
Yeah.
I don't think they need, just like Ben said, I don't think they need a big pharma crutch. I don't think they need a big marquee name to come in and get this over the finish line. That's what Doug has set out to do from day one. And I do truly believe that he's going to do that, whether it be with 003 or whether it be with one of the DMT therapies. They will get something over the line because the data is resounding that they keep reporting on.
Yeah.
You know what? You almost forget about, and I commented this on a post yesterday on Twitter, but you almost forget about the fact that they have the DMT program. I mean, just on what we're seeing on CYB003 alone, that is hugely investable. As again, because of that buffer. I mean, that's so important that they scored so high, because the results could still have, and everything's all good. But the DMT program is almost equally as exciting. Not quite as far in the research front, but I mean, these are two really, really strong programs.
I would let Doug speak on this on Monday. I'm actually going to ask him, but I'd be willing to bet from an IP and a patent perspective, the DMT portfolio probably is more defensible than 003 from an IP standpoint.
Either way, that small pharma acquisition gets more and more attractive each day, does it not, gents?
Yeah, especially what they paid for it. I mean,
I know.
They got it at a very, very attractive price.
Hey everyone, so what'd you think of the video? Leave your comments below and let us know your feedback. We'd love to hear from you. As usual, subscribe to our channel by clicking on the link here. If you want to see more videos like this, then click on the link here and click on that bell for all notifications. Because most importantly, we want to know your feedback, because we wouldn't be here without you. Thanks for watching, everyone.